How you doing out there? It's Cranston Kelly, Atlanta's right-hand man for real estate. And today I want to talk to you about some advantages of being a first-time home buyer. So let's go ahead and jump right into that. There's a couple advantages. Number one is going to be being able to qualify for a lower down payment, with some government agencies, some government loans that's out there for you. And then number two, being able to deduct some of those mortgage related expenses from your taxes. So first, let's go ahead and get into this down payment thing. Now, the first thing that normally first time home buyers are going to run into, the biggest obstacle is going to be the down payment, because you have a house out there that's going to be, let's say you're looking at a house about $250,000, right? Now the banks and the lenders are going to be looking at you and be like, all right, but we want 20% down of that $250,000. Well, guess what? You don't have to take off your socks and shoes. I did the math for you. I got you. All right, $50,000 is what they're going to want you to put down as a down payment. What? I know. I'm saying the same thing. I don't got that. So guess what you got to do? You got to ask your sister, brother, auntie, uncle, Ray and them if you can borrow the money. Guess what? You're going to have to pay them back too. So you're going to have to pay that loan. You got to pay this loan. So what the banks do is, for first-time home buyers, sometimes they'll go as low as 3% for you. And you got to check into that, because there's some programs out there, also some government-backed programs, some FHA loans that allow you to get a guaranteed 3.5. But to qualify for the 3.5, you have to have a credit score of about 620. So if you don't have a 620, you're a little bit lower than the 620. There are some other things for you. If you have about a 580, you may put down about 10%. Great, right? But what they're also going to require from you, these lenders, they're going to require you to get PMI. PMI is private mortgage insurance. What they want is some coverage to take care of them just in case you decide to default on a loan. They don't care about what your uncle, sister, brother, Ray and them got. They didn't get that insurance. That's on them. But the banks is going to be taken care of. So they're going to make you get that insurance. Now, what I've seen is, if you got a loan for about $250,000, it may not be exactly, what this is, but that may add another about $150 to your monthly payment. But there is a light at the end of the tunnel, because after you pay about 20% of what the loan is, that $150 would drop off of your payment, and then you don't have to worry about that no more. Now, there is something else out there. We talked about, what you want to do. If you have your payments, any mortgage related payments that you're making, they may be able to be tax deducted. But what I would say is, don't get your tax information from me. What you want to do is consult a tax specialist and have them take a look at that and be able to tell you what you can have deducted and what you can't. So I hope this video was able to help at least one person out there. And if it did, please hit the like button at the bottom. And if you have any comments, send me an email or leave them in the comment section. I'll definitely get back in touch with each and every one of you. I promise that. And then also, I am an agent here in Atlanta. So if you need a real estate agent, it will be my pleasure to help you find your next home. Again, my name is Cranston Kelly, Atlanta's right-hand man for real estate.